Welcome to the WTR Healthcare Happenings podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's special podcast episode, I'm being joined by David Sands, PhD and healthcare investment banker, to discuss the state of the biotech industry. On this episode, I want to dive into real mechanics of value creation in the capital markets, not the theory, but what actually gets deals done. I also want to delve into how structured asset acquisitions and creative financing can rejuvenate distressed sub $1 stocks with low or negative shareholders' equity that are at risk of Nasdaq delisting. David, thanks for joining and great to see you again on the.
Thank you, Tim. It's always an honor and a pleasure to connect with you. And
As I mentioned before the recording started, the world's changed a lot since you were last on, so I'm really excited to catch up with you. And I know there's been a lot of activity in your space, so looking forward to covering this. So for our audience, would you remind them once again, please, of your professional and academic background?
Yes, thank you, Tim. So my name is David Sands. I'm a healthcare investment banker, advising and M&A, focus on healthcare, biotech, life sciences, and working mostly with publicly traded companies, some private companies, on the strategic advisory on raising capital. Over the past 2 years, I have been spending a lot of time in the corner of the market that most investors either ignore or fear. These are listed companies with a low or negative shareholders' equity and stock prices that trade under $1. This provides a strategic opportunity for a lot of companies, a lot of investors, and specifically what I mentioned to you, Tim, is that I like to talk about this type of transaction. We call it a strategic asset acquisition with the financing that can be useful, can be of interest, and can spark basically interest for investors by the companies and also asset sellers. And this is the playbook that can result in helping kind of what we call a broken stock and basically help regain compliance, regain with the same management team, with the same board, to have basically a continuity of this stock with a new asset.
So that's great service that's needed. So if I pivot here for a second, David, to discuss biotech from an industry perspective, what is the current state of the biotech industry in terms of market dynamics? And what I am noticing is kind of the new Nasdaq reality, which is less time, less room for error.
Yes, and let's talk about these the backdrop of the biotech industry now. I think that everybody will agree that we are in a downturn for biotech healthcare. It's very tough. It's difficult to raise money on this market. And as we look forward, if there is an increase on interest rate, it will get tougher. So over the past 2 years, 24, 25, what we have seen is a tightening of the listing process by Nasdaq and NYSE. Traditionally, Nasdaq and NYSE, when they have a company trading below $1, they will basically leave them alone to see if things improve. Today, if you have a bid price that is under $1 for 30 consecutive trading days, you will officially be non-compliant. What that means is basically that the Nasdaq or NYSE, the market regulator, the market managers will basically send a non-compliance letter. These are companies that have less time to regain compliance as if they have some type of problems regaining compliance. In some cases, the trading can be suspended. Then they start with a appeal process. And what we are thinking is that rather than allowing, what we see is that rather than Nasdaq or NYSE allowing for these stocks to drift and basically regain compliance, is that now we need a real business solution for these companies, not just the cosmetics, but we need basically an opportunity, a new playbook that can turn around the situation, bring new assets, and bring financing at the same time.
Yeah, no doubt this is putting significant incremental pressure on both management teams and boards as the nuances continue. So given your detailed sector knowledge, David, what future technologies and investment themes are likely to prevail in the investment sector that investors should be watching for, particularly as we're looking at negative equity, broken balance sheets, and why does the story still matter?
Yeah, that's a very good question. So let's talk about first about these negative shareholders' equity for a minute. So when you see a company, Nasdaq, NYSE, trading with a negative shareholders' equity on the balance sheet, it usually means one or two things. Either the company has accumulated losses that wipe out on retained earnings, and often it basically is combined with leverage or other combinations. The company has an aggressive repurchase shareholders. There may be some technical push in equity, but overall there is a reason why there is a shareholders equity that is negative, but the company has a pathway to regain positive shareholders equity. On the other side, other companies with a negative shareholders equity could happen because they have spent a lot of money and the clinical trials are basically negative. That means that asset basically diminishes in a lot of value, has no value. And they result basically in 5, 10, 15, $20 million in shareholders equity. And that makes the company being basically non-investable. This type of situations is where we consider a position of weakness. These companies will have a hard time basically convincing investors to raise more money, and they will have a hard time convincing Nasdaq from the standpoint of compliance that they have a pathway to regain compliance. So these are very weak situations. That is where a new playbook that basically and allows a company of a structure recapitalization, and we can do that efficiently with new assets, new investors, and basically look for, to your question, a strategic assets that are strategic to that management team, assets that are strategic to that pipeline, assets that represent a real business opportunity for these companies to regain compliance and to go back on the clinical development, which is basically their strength and the ability to create value.
So of all the sectors that we cover at Water Tower Research, I've always been struck by the fact that the biotech sector historically is extremely capital intensive. Seems like fundraising is nonstop, particularly for the smaller players. Can you discuss asset acquisition and financing in the micro and small cap biotech sector? And what is a strategic asset acquisition and financing in this context?
Yeah, so a strategic asset acquisition and financing, I mean a type of transaction where a struggling public company acquires a high quality asset or high quality operations that can turn around the asset base, the asset kind of accumulated assets in the company. These assets are normally coming from a private company that may not be able to raise more money. Sometimes it comes from a fund that has a number of assets that basically have no progression or have no interest in they have no visibility in the public. So what we find is that most of the cases we are able to match science with the management team. We spend a fair amount of time to understand their strength, understand their clinical trial relationships, and try to match an asset, a clinical development asset that can turn the company around and has a specific strategic feed with this type of management team. Secondly, we look for non-dilutive financing. Sometimes we find some of these assets have already a clinical trial that has been prepaid. That means they don't have to spend money on the clinical trial. Somebody paid for that clinical trial. Other times we look for dilutive equity offerings at a higher price.
That makes a lot of sense. So this has really been insightful, David, and I appreciate you taking time out of what I know is an incredibly hectic schedule that you keep up with. In wrapping up, any final thoughts on where the biotech or healthcare industry is headed to include innovative and impactful technologies that investors should be keeping an eye out on?
Yes, Tim. Yes, Tim. What I have seen going to the biotech conferences in 2025, 2024, now basically almost half of 2026, is that there is a clear trend in M&A. The M&A activity has increased tremendously, and there is basically a growing type of transaction where there is a strategic acquisition. In other words, instead of merging two companies, I see more and more these asset transaction, assets where basically exchange hands, exchange portfolios, rather than basically staying a corporate and doing takeovers. Many times when we see an M&A, we see one lead asset that has 99% of the valuation of the M&A and the entire pipeline that has less than 10% of the valuation. That is why a lot of investors and a lot of bankers are basically, we're working on creating more value for shareholders by doing transactions with these pipeline secondary assets that have been sitting idle, may not have all the funding for these assets, and there is great value opportunity for shareholders and investors to further develop these assets in a different home, in a different setting, in a different team, in a different publicly traded entity that is starving for a new story. So today we see tremendous interest from alternative capital sources, and that we see combinations that we didn't see before. We are now using one instrument that is an insurance, a clinical trial insurance for phase 2 assets. That attracts a type of investors that didn't come before. This is something that we are very passionate. This is something that we feel is a great solution for a lot of companies, and we'll look to do more strategic asset acquisitions and financing, and to use this playbook to rejuvenate these broken stocks.
So thanks for sharing. Always good to see you. Let's plan to have you come back on in a few months, because everything's changing so rapidly in your space that we'd love to get another catch up as kind of midsummer if you're available.
Beautiful. I love it. I'll see you. I look forward to seeing you, Tim.
Great. Have a nice day. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Healthcare Happenings podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.